Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Wednesday, August 20th, and we're in the middle of the US session. The minutes for the August Bank of England monetary policy meeting revealed that there were two votes to raise the official bank rate by 25 basis points. This can be considered hawkish because it is the first time in 3 years that there was no consensus. The market put on some pound strength after the release of the minutes. Let's take a look at the pound dollar, pound yen, and the euro pound to assess the reaction. As you can see in the 4-hour pound dollar chart, the market is very bearish. It has been persistent since cable retreated from 1.7191, which was the 2014 high made in mid-July. The week started with a rejection here at around 1.0735, after which price fell until 1.66. It held there today and bounced up after the Bank of England minutes. However, you can see that there is no sign of a reversal or any consolidation of significance. A break above 1.6750 and above this falling trend line might be needed before introducing the consolidation or bullish correction scenario. Otherwise, downside risk remains back towards 1.66, and looking at the daily chart, and we still have further downside towards the next key support at 1.6465. We might actually also find some buyers here around 1.6550. Okay, you should note when you look at the daily chart, you should note that there was a very strong bearish candle here to start the week, or at least on the Tuesday session, and this candle broke below the 200-day moving average, which adds to the bearish outlook already in place since mid-July. The pound yen has been bearish in August, choppily trading down since the 175.36 high on the year made in early July. This week, we started with pound yen falling toward last week's low here around 170.42, and so far price is showing ability to make a higher low. Then the Bank of England minutes extended the pullback and helped it push above a falling trend line coming down from the July 29 high at 174.22. For now, the 172 handle seems to be acting as resistance along with the 100 period as simple moving average in the 4-hour chart. And at this point, we need to see a break above 172.60 before considering a shift away from the bearish trend that's developed in the short term. When we look at the daily chart, okay, we can see that the mode is still neutral bullish, and with price still above the 200-day SMA, pound yen has preserved the bullish trend since January of 2012. So this is a trend that extends all the way back to, let me go like this, you see, January 2012. Okay, so that trend is still preserved. And again, so if the mode in the short term is no longer bearish, then we can consider the bullish continuation scenario for the medium term. Again, we should at least wait until the break above 172.60 and the 4-hour RSI to push above 70 before considering this bullish outlook. So we saw the pound dollar, which looked to remain bearish, and the pound yen, which looked like it wanted to revive the bullish trend, but it still had a few challenges. The euro pound is similar to the pound yen in that it wants to revive that pound strength. The euro pound pair has been consolidating since mid-July, and on the 4-hour chart we can see the bullish correction pattern that has been forming over the past 3 weeks. Price stalled at 0.8036 last week, and a bullish attempt this week has failed to breach that high. So we are forming a price top, especially after today's pound bullish reaction, which followed the Bank of England minutes. So we have this price top, but we still want to see the RSI push below 40 and preferably below 30 to show, bearish momentum developing. And also, if there is a pullback, it would be good to see price hold below 0.80, which would help the bearish case grow stronger. When we look at the daily chart, we can see that price essentially held below this previous pivot here at 0.8033, and the RSI held below 60. This reflects that bears are still in charge and the maintenance of the bearish momentum, which further suggests price should be pressured back towards the 2014 low at 0.7874. And that wraps it up for today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you safe and good trading.